There are really two things that are going to put a hard stop and make it impossible for you to get an IUL or an index universal life policy. But even if it is possible for you, right, technically to get an IUL, it may not be the best financial move for you. And so in this video, I'm going to walk you through not only what makes it possible for you to get an IUL, but also the three questions that you want to think through and reflect on so you can figure out if it makes sense for you to get the IUL based on those things that are really going to either restrict or fuel your index universal life policy. If this is the first time that we are meeting, my name is Nobu. I'm a licensed financial strategist, and I help working professionals 40 and over save smarter and pay less taxes by using life insurance strategically. If you'd like to work with me, link is in the comments. Now, it is important to remember that an IUL is a life insurance policy, and as it is life insurance, you are not entitled to get it. Essentially, there is an application process and there are standards that each company has as to who they want to insure. Each company dictates what its rules are and stipulations to get insured by them. And one of those stipulations is age. So there is a cap to the age that you can be to get an IUL. Different insurance carriers have different limits, but the oldest that you can be is 85, again, depending on the specific life insurance company. So as long as you're 85 or younger, technically you can get an IUL. Now, the second major factor that's going to determine whether or not you can get an IUL is your health. Think of life insurance like gambling, essentially. What the insurance company is looking at is, okay, if we insure this person, is this person going to live for a long time? So we lessen the possibility of us, the life insurance company, losing. Because life insurance is essentially a contract. So the insurance company and you are agreeing to a contract that as long as you are paying your premiums, they're going to live up to their end of the bargain. One major end of that bargain is that as soon as your policy starts, if you pass away, even the very next day, they have to pay out the full insurance coverage. So you can make one payment for $500, and if that policy amount is for $500K, that life insurance company is obligated to pay that full $500K, even though you just paid $500. As a result, when they are considering who they want to insure, they are not going to insure people that have a higher likelihood based on their math of passing away sooner. There are certain things, certain diseases, certain medications, certain situations medically, where if you have any of these diagnoses, it is going to be an automatic no for an index universal life policy. So for example, you could be 25 years old, but if you have certain medical conditions that carrier deems is a high risk, as in they deem that there is a high probability that you are not going to live a very long life, they are not going to insure you. And so even though you technically might be within the age range to get an IUL, you're not guaranteed that you can get it. It depends on what your health situation is. I'm also going to double back to age a little bit. So we have the technicality of just how old are you? And with that, it's also important to know that as you get older, your life insurance costs get more expensive as well. And so with an IUL, you're always paying for life insurance, and then you also have to pay above and beyond that life insurance to go into your cash bucket. So if all you can pay is just the life insurance, an IUL is not for you. So an IUL theoretically is going to be more expensive in terms of what you're putting in than a regular life insurance policy, because you always have to put that extra into your cash bucket. And so if you think about life insurance getting more expensive as you get older, the older that you are, the more you need to be able to put into it in order to make up for the fact that your life insurance is more expensive. It's important to keep that in mind because we're going to talk about it a little bit more when we talk about the things that are going to fuel or limit your IUL. Now, while age and health are two things that'll completely just take you out of the game completely, where if you're above the age or you have certain health conditions, you simply cannot get in. Two other things that are going to impact whether it's possible, but with these, it's just a time limit. First, your driving record. So if you have DUIs, DWIs, multiple accidents, multiple high-speed tickets, that is going to impact your ability to get an IUL, but it'll impact it for a specific amount of time till those things are over a certain age. Same thing with misdemeanors, felonies. If you have any of those in your recent past, that will make you ineligible for an IUL for a specific amount of time. So if you can technically get an IUL, right, your health is good, your age is in line, driving record is good, criminal record is pristine, the next thing you want to ask yourself, if you're like, okay, is it too late for me? Can I still do this? Are these three things that are different but intertwined. A lot of times people call and ask, should I get this? Is this a good idea for me? And I cannot tell you whether or not something is a good idea for you. I can ask you questions about what you're trying to accomplish, what you're trying to do, and then based on that, say, okay, yeah, you can do that thing or you cannot. But nobody knows the ins and outs of everything going on in your life. So it is important for you to be able to take a step back and make financial decisions for yourself based on everything you know about yourself, because nobody can see through your head. Nobody knows your whole story. So hopefully these three things will help you feel comfortable to take a step back and determine, does this product make sense for you? I'll go through each of them one by one, but you'll see how they all kind of interconnect in order to create this puzzle, which will help you figure out whether or not it's too late for you. And it's the same questions that I would ask you for you to figure this out for yourself. The first thing is just, what is your goal with this account? So this is a life insurance policy, yes, but you also have the added bonus of having this supercharged savings account attached to it. It's a supercharged savings account because the interest that you'll be getting in this account is a lot higher than what you'd be able to get in a bank account. And so the first question is, what are we doing here? So are you primarily opening this to have a life insurance policy? Are you primarily opening this because you want to use this for retirement? Are you primarily opening this because you want to be able to invest in real estate from this account? It's important to be clear on what is the goal for this account and have one main goal in order for you to figure out whether or not it's too late. It's because what your end goal is for this account is going to determine a few other things. It's also a very customizable account. And so if you're trying to do 10 different things with this account, you're gonna have an account that's not doing anything well. If you take a step back, even just with regular savings, most people that are serious about their savings have different checkings, different savings, just so they're clear on what's going to which account and they stay organized. For myself, I have multiple savings accounts depending on what the goal is. So I have a savings account that's specific for travel. So I know, okay, I want to take X amount of trips. So based on that, I'm putting X amount of dollars into this account. I have a separate savings account for my fund money. I have a separate savings account for funds that I give to my parents. So if I'm serious about wanting to be able to consistently go on a trip like every quarter, if I just have everything in a general savings bucket and then like somebody has a big wedding and I buy a big gift, well, then I can't go on my trip. Now, thinking about your IUL, because it has to be built out and customized for each person, if you're clear on what your end goal is, then you have a higher probability of this account being designed in a way that actually helps you to accomplish what you're trying to do. Next question is, what is your timeline? So, for example, if your goal is, I want to use this account to buy commercial buildings, then the next question is, well, when do you want to buy these commercial buildings? Are we trying to buy this commercial building next year? Or are we trying to buy this commercial building in 10 years? Because remember, as you're putting money into this IUL, part of your funds are going towards paying for your insurance. Part of your funds are going into your supercharged savings account. And so it's important for you to know, when do you want to start doing this thing? And so you have a realistic idea of whether or not you have the time to make that happen. And speaking of time, that is actually the third key fuel factor, which is either going to make your IUL be supercharged or limit what your IUL looks like. Part of what makes the IUL powerful is that as you're putting money into this savings bucket, you are getting a good amount of interest credited to that each year. And so the more that you have in that account, the more interest is going in, the more that your money starts to grow on itself and compound. So if you're thinking, okay, I want to see this money grow, that is going to require time. We're gonna keep this example of buying a commercial building. So if you want to buy a commercial building, and let's say you're somewhere that's not very expensive, and that commercial building is $500K, it's important for you to think through, okay, one, what is my goal? That's a commercial building. Two, what is my timeline? I want to buy that commercial building in 10 years. So if it's 500K, part of my money is going towards cash, part of it is going towards the insurance, then just logic, like how much do I need to put in here to be able to get 500K? And it's important to note that the money does not grow magically. What you can get out of it is directly related to how much you're putting in. And so if you are not putting in a significant amount of money that's going to lead to 500K in 10 years, then you're not going to be able to pull out 500K, right? So if your goal is, I want to buy a building for 500K, but I'm only going to be putting in $1,000 a month, it's not possible to get to 500K in 10 years. And so it's important to remember, like, what is my time to make this happen? What is my budget? Like, what is my money looking like? And then what is my goal, right? The time and your money are the two things that are either going to fuel your IUL or are going to limit it. And so whether or not it's too late depends on what are you trying to do exactly? What is your goal? What kind of time do you have? Like, do you have time for that money to grow? And two, what does your money look like? If you have time, that is good. There's more opportunity for you to get interest and for it to compound on itself. If you don't have time, then you have to have the money that matches what your goal is, right? So if your goal is, I want to be able to take out 10,000 next year, but you're only putting in 1,000 this year, it's not possible for you to take out 10,000. But if you're 20 and you're putting in 1,000, you want to take out 10,000 in 10 years, then there's a higher likelihood of that happening. The time, money, and goals all kind of intersect, but they also overlap with your age and your health, because one, the older that you are, the more expensive life insurance gets. Also, the less healthy you are, like the more things you have going on medically, even if you do get approved, it's also going to be more expensive. So keep in mind that you're always paying for insurance, and for this type of policy, you also have to put in more than just your insurance. If you actually want to see cash growing, the older that you are, the more of your cash is going towards paying for the insurance. So it's important to have a realistic understanding of what do these numbers look like and does my goal make sense? So if you are 60 and you're retiring in 5 years and you're saying, okay, I want to use this for retirement and I want to get $20,000 a year, if you're only putting in a couple $100 a month, that's not going to happen, because out of the couple $100 a month, you always have to pay for insurance. You always have to have cash. As you are older, your life insurance costs are more expensive. And so that $200 is not going to do a lot for you. Whereas if you're 20, you put in $200, you have the benefit of time. You also have the benefit of money, because as a 20-year-old, your life insurance is a lot cheaper. So if you're 50, 60, 70, asking yourself, is it too late for me to get an IUL? Check with yourself, like, what am I trying to do with this policy? Do I have the time to get to this goal? If I don't have the time, do I have the money? Because you got to have either time or money. If you have both, you're golden. So far, all of this is doable. It sounds like a good fit. The next step is actually finding someone to open this IUL for you, because you cannot do it on your own. If you want to work with me, link is in the description. If not, this video walks you through exactly how to go about finding someone to open your IUL for you. I'll see you there.